I mean, Bitcoin was at 3,500 2 years ago. It's now 10x that. What do people want? Blood? I mean, it's like, it goes sideways for a while. That's all okay. It's gone up 10x. ETH's gone up 20x. That kind of stuff. It's crazy how fast it's gone up. It's like, well, it's not going up today, therefore everything's screwed, and this is the worst thing ever. People just have to be patient, understand time horizon. Well, don't forget, when crypto rallies, you tend to get these kind of, 3 to 500% rallies in the bull legs. So, that's 150,000 in the next rally, let's say, if it goes up 5x, and then it corrects a bit, and then it goes up again. It doesn't take long for the performance to compound. So, whether it's 3 years or 7 years makes no real difference to any of us. The point being is the long-term logarithmic trend of Bitcoin remains in place.
After a couple of extremely tumultuous days, Bitcoin, the world's largest cryptocurrency, is back above $30,000. The coin has recovered some of the most recent losses, gaining over 9% within the past 24 hours. After crashing below $2,000, Ethereum has also regained over 8% of the earlier loss and is now trading at $2,108. Binance is up by 19.12% at $328. XRP is up by 19.65%, Cardano by 31.27%, and Solana by over 23%. Polkadot and Avalanche are also up by 34% and 24%, respectively. The week's massive sell-off seems to have taken its victims as Luma has finally crashed to $0. Terra's stablecoin, UST, has also crashed below 20 cents. Though the market is up, we are still dealing with a larger bear market worsened by macro issues like inflation, Fed tightening policies, and the increasing threat of recession. In a recent interview, Real Vision CEO Raoul Pal talks about the crash and what investors can look forward to as the market tries to deal with all the negative macro issues. This promises to be an enlightening video, so ensure you watch it to the end and hit the like button. That would really make our day here at Savvy Finance. Enjoy the video.
The market narrative for the last year has been inflation. Inflation with some elements of growth. That narrative is now changing as people realize growth is about to disappear from the economy. And we've started to see the weakening in things like the ISM survey and many forward-looking indicators. I've just done a huge piece on Real Vision about this, about the forward growth is slowing dramatically. So we get this market, this position for inflation and an okay economy. Suddenly, you take economic growth and all positions start looking troublesome. So whether you're long commodities or you're long equities or you're long technology, everything gets blown up at the same time because the markets really struggle when you change the regime within the markets itself. I think the regime is shifting eventually to inflation disappearing and growth going down. So a more deflationary environment. So what that means is the financial markets already have tightened instead of the Fed. The rate of change of 2-year interest rates has been the fastest on record, and that tends to lead to a slowdown in the economy as those rate rises kick in. So therefore, the Fed are unlikely to raise rates as far and as fast as people expect. My guess is they probably stop raising rates sometime in the summer, and that will be it. So, and because the economy is going to be slowing down and inflation is going to be slowing down. That is exactly the environment that crypto likes. Crypto likes a slower growth, the Fed looking to on hold or maybe on ease. That's exactly what happened in 2018 at the crypto low. And we've got a very similar setup now. So we should, going forward, see a situation where as the Fed narrative changes and the markets start picking it up, we'll see bonds rally, crypto rally, maybe some of the technology stocks rally. So that's the phase I'm looking for from maybe the summer, but we've got to get from here to the summer first. And that's when this issue of positions being liquidated can go on. We're seeing the dollar go up a lot very fast. That unstabilizes markets as well. The equity markets can't find a footing. They've probably got another, if we follow 2018, they've probably got another 10% lower to come. That last phase, what I think it is going to be a last phase, tends to bring all assets with it. Gold is getting hit today. Cryptos can't, find traction. Because if you think about it, one of the reasons crypto's not gone up is the fact that, and the networks are relatively slow, they've not grown in a while. It's because retail investors' income has not gone up as much as prices. So they've lost discretionary income. So therefore people can only dollar cost average less, can get less involved. So what we're seeing is activity within ETH, for example, where people are trading NFTs and that money stays within the ETH economy. And there's been some switching amongst Solana, AVAX, Luna, that kind of stuff. But the space isn't growing because of this issue with wages and inflation. So that dynamic needs to shift somewhat. I don't not believe in a halving cycle. I just think it's less relevant as more players have come into the space. So it doesn't become the predominant driver, but one of the drivers. And as we talked about, macro is a big driver in the space that it never was before, because there are different participants in the market. The different participants, the institutional investors and the hedge fund investors, have also changed somewhat the structure of the markets. So that depends when they have availability of capital and they don't have availability of capital. So there's the market, as it broadens out in its ownership and participants, changes structure over time. But the key structure has always been the logarithmic network adoption model, which is Metcalfe's law. That is the key structure of markets. Whether there's a cyclicality based on the halving cycle or not, it's kind of largely irrelevant. What we're trying to say is, over time, adoption is everything. Yeah, and also I've done a lot of work on, okay, what are the predominant drivers of network effects? And I found that two variables explained most of price. They are the number of active addresses, but more importantly, the value transacted on the chain. So Bitcoin is valued more than Ethereum for two factors. There's slightly more wallets in Bitcoin, active wallets, but Ethereum's catching up very fast. And there is the value exchanged in Bitcoin is higher. So for example, we're seeing Terra Luna buying Bitcoin, big size. We see MicroStrategy's big size. These size of transactions mean that the value of the network, if you've got big transactions and a lot of people doing them, makes it more valuable. ETH has a lot more transactions than Bitcoin, but they're smaller in value. So the total value being exchanged on ETH is actually less than Bitcoin, even though the number of participants is I don't know whether it's higher now or not, but either way, it's that value transacted that's the key part of valuing the network itself. Well, don't forget, when crypto rallies, you tend to get these kind of, 300 to 500% rallies in the bull legs. So, that's 150,000 in the next rally, let's say, if it goes up 5x, and then it corrects a bit, and then it goes up again. It doesn't take long for the performance to compound. So, whether it's 3 years or 7 years makes no real difference to any of us. The point being is the long-term logarithmic trend of Bitcoin remains in place. And that trend will play out and how it plays out. But over time, we know where it's going.
The Real Vision boss and former Goldman Sachs executive believes there is still hope for the cryptocurrency market later in the year if the Fed stop raising interest rates. He also sees larger price increases driven by larger network adoption in the long term. What is your outlook for the cryptocurrency market in 2022? Do you see a bounce that takes us to a new all-time high, or more months of consolidation between 30,000 and 40 to 45,000? Please leave your messages in the comment section below, and don't forget to hit the like button. Thanks for watching.